Good morning and welcome back to Margin. This morning we're going to talk about why you need life insurance. So let's jump right into it. Now, in the theme on care, we briefly covered life insurance. Now, I stress the importance of life insurance quite a bit for those who are not self-insured, because it's usually an inexpensive cost in the big picture, in the big scheme of things. They can provide you and your loved ones with a great deal of peace when it comes to having peace of mind. Now, there is still a use for life insurance if you are self-insured, but the justification for having life insurance significantly decreases at that point. So when I say self-insured, I'm referring to being in a place where you own your home free and clear, or you have a small enough mortgage that it can be easily paid off in the event of your passing. Now, this also means that you are debt-free otherwise, or that there is an ability with your investments to easily cover outstanding balances that may exist after you pass away. Now, the last component is that you have investments, you have savings, and you have assets otherwise that will sustain those who depend upon you. Now, only you and those that depend upon you can determine what the savings needs are for the foreseeable future to have in savings. But keep in mind that if you are the provider of your household and that income source or sources goes away, will you be leaving your spouse or those that depend upon you in a place where they're susceptible? And so you want to make sure to look at your income sources to make sure it can sustain the liabilities and the living expenses that your family would have, and then for how long you would need to plan that for. Now, this will help you determine how much you need in assets before you are technically self-insured. So it's important to go through this process to figure out how long you would actually need to plan for. So if you are concerned as to whether or not you need insurance, here are two questions to ask yourself. The first one being, who depends upon you, and what do you own or owe accordingly? Now, let's start out with that one. So who depends upon you? Do you have dependents? Do you have a spouse? Do you have children or someone who is dependent upon you otherwise? Now, I believe the primary reason to have life insurance is for the sake of providing a means of provision to your loved ones in the event of a premature death. Now, this policy covers outstanding debts, burial and services for your passing, as well as living expenses for a certain period of time after your death, so that your loved ones can focus on the actual grieving process without immediately needing to deal with your affairs and the fear of the unknown. So this need for life insurance is further magnified if you are the sole or primary provider of your household. And so you'll want to keep that in mind of if you have a dual income household, you may need less in savings or to be self-insured and versus having a sole income or an individual income. Now, question number 2 I would ask is, what do you own and what do you owe? Do your liabilities actually exceed your assets? And that's when you should be concerned about making sure that you have the right policy in place that will give the additional funds that you need so that, in the event of your passing, those who are responsible for your estate can actually pay off everything and not have additional debt that's owed. Now, this may mean that you owe more on your home, your vehicles, or your business than it may be worth selling it on the open market or selling those items on the open market. Now, this will change based on the equity you have, the economic conditions at play, and possibly the recency of acquiring that asset. But the important part is to ensure that in the event you pass prematurely, that you are not leaving your loved ones with a mountain of debt that can't be covered by the sale of the underlying asset. So in today's market, oftentimes people are significantly less likely to be underwater on their mortgages and possibly even on their car notes because of the market and where it's at right now. But that doesn't mean that there isn't other unsecured debt like credit cards, lines of credit, or personal loans otherwise that would not have an asset that's securing them. And therefore you would have additional amounts that you would need to put towards paying off those debts accordingly, being that there wouldn't be an asset that's underlying. Now, you may be self-insured, but still be unsure whether it's best to cancel the policy or not that you have in place. So if you went through the process of getting your health scan completed and you qualified for your health insurance policy at a certain level, but your health has since changed, you will want to consider holding on to that policy. Now, if you signed up for a level term life insurance policy that has a nominal cost per year, you may just consider holding on to that policy, as it may not be possible to get another policy if your health has since declined. Now, there are a lot of different products out there, and of course, they are not all created the same. They're not all created equal. So evaluating your life insurance products on an annual basis will be a good way to ensure that the rates are still favorable, that your policy has no material changes to it, or that there's not any better policies you could put in place that protect you in a more comprehensive way. So if you're in the process of finding a new policy, consider utilizing a fiduciary in order to shop around for policies that may fit you best. Factor in what product would allow you to have a level term for a period of time that would get you to the point where your home is paid off, where maybe your children have moved out and they're off to college or in their careers. And you anticipate your retirement savings being at a certain point that would allow you to be self-insured at that point. Now, there are so many products out there, and I'm sure that they each have their own place in the marketplace, but based on those specific situations, you may apply one insurance policy for one purpose and you wouldn't apply that in other aspects. So be mindful of the fact that insurance agents, financial advisors, and other professionals will sell you on life insurance benefits based on what benefits them from maxing out the amount that you qualify for and selling you the most expensive form of life insurance. Now, that doesn't mean that all professionals are only out for themselves and they're not out for your good or your betterment. It just means that you should follow the wise words of Ronald Reagan and trust but verify. Make sure that that product is actually in your best interest. Now, many people can benefit from getting a low-cost term life insurance policy without spending significantly more on a whole life, universal life, or permanent life insurance policy. So this term policy is typically recommended at 8 to 10 times your annual income, but should be evaluated on the cost of living in your specific area, what the insurance needs will need to cover, and how long those coverage needs will need to last. Now, another consideration that I've seen a number of times are life insurance policies that either parents or grandparents have bought for their children or their grandchildren accordingly. Now, this may be a great way to leave a legacy to the next generation, but just be mindful that the cost associated with getting a life insurance policy for aspects like a premature death and burial, God forbid that happens, is oftentimes an expense that carries on for a long period of time. And even though it may be nominal, that coverage for something that would be, could be something that you pay out of pocket and something that may lapse at some point or be canceled once it's transferred to the beneficiary, may not be a blessing that you thought it would be initially. So keep in mind that you may want to give that gift in the form of an asset that appreciates, like a stock, maybe a college fund like a 529, or some other in some other benefit, in some other way that is not an expense that's being passed to your children or your grandchildren accordingly. So my call to action today is to utilize the 2 simple steps in order to find out if you need life insurance. Then review the policy or policies you have in place, evaluating these policies each year that will ensure that your needs have not changed and that you have enough of the right coverage in place. If this information is helpful to you, please do like, subscribe, and hit the notification bell so you're reminded to come back on a daily basis and improve in managing your personal finances. Thank you for your time. Enjoy your day, and we'll see you back here tomorrow.